Nihoma, Jumbo, Ohio. Good morning. Hey, it's Tuesday, February 12th, 2019. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, good morning. My name is Wayne. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being here at today's webinar hosted by Forex.Today on the Forex.Today YouTube channel. Please don't forget, is that logo in my head? Nope, this way. Please don't forget to subscribe and like. Also, below the video, you have access to all my chart templates, all my chart profiles, all my chart indicators, the pivot points, the moving averages, everything you need to succeed is down there for free. So how do you do that? Well, first of all, download the files. Then go to TradersWay.com, open up an account. Even a demo account is fine to start with. And when you're in the back office, download MT4, then take my charts, install them, and now your charts look like my charts. Then you can come to the webinars every day. I will do my best to teach you how to trade Forex successfully, both technically and fundamentally. And we'll address those psychological issues. The blood, sweat, and tears for years is a real thing. So again, pay it back, subscribe, like, comment, and open up a demo account at TradersWay.com today. Pachow! Yeah. So what's going on, guys? Feeling good? Large and in charge. Let's go around the world here. WTI. Hey, look at that. Hey. Hey. Hey, look at that. It dropped down to our buy zone and then it went up. Wow, that's cool. Who would have thought that, huh? Okay, this is the buy zone for the month. Anywhere in there is good. We don't really want to go below this because that really technically becomes bearish. We talked about this looking not very bullish on the 4-hour, but much more bullish on the daily. And we had a daily 21 in there, and it didn't really hold. But still, nonetheless, we talked about how would you treat this on a higher time frame if all you looked at was the daily. Is this what's going on this month? Is that what's going to go on in Feb? I mean, this is what trading gets down to. What do you think is going to happen in February? A lot of people skirt this question and they just say, oh, well, you know, oh, I only trade the 15-minute and the 5-minute and that doesn't matter. And I only scalp, therefore I don't really need to do risk management. And I only scalp so I don't have to do fundamental analysis. I don't have to read any reports. I don't need to know supply and demand. Price is everything, blah. Which kind of makes me want to vomit all over my desk because that is dumb. But I hear it a lot. So anyways, when it comes down to, you know, one day when you want to be a professional trader, I think this is going to be a fairly reasonable question for someone to ask you. So what's oil going to do in February? And you say, well, it's been struggling the first week or so, but right now our analysis tells us that we're nearing a buy zone, and ultimately the target by the end of the month is going to be, you know, above $60. So we're going to be buyers around 50, and we'll take a look at taking profit somewhere about or between 60 and 63. That's our plan. Okay. What do you think? It's so much better, right? Chuck Duck's just downloading the recent OPEC. Cool. So I've given that advice a million times, right? Go to OPEC, go to EIA. Has anyone gone to the Chevron or Exxon websites and downloaded their, let's say, their annual outlook report? Not their annual report, but they do like an annual outlook, that kind of stuff. What's up, Pharaoh? That's another thing to do. I mean, they do a lot of analysis. Now, of course, they're going to look at it through their personal lens, but there's a lot of great information. Stanislaus says, "Hi, sir. How do you if your technical fought your?" All right. Well, here's what you do. This goes to Stanislaus. You do long-term technical analysis, so let's say daily or higher, and you look at economic reports, okay, and you come up with a bias, okay, and I know you know this. It's a starting point, right? And you say basically whatever we're looking at, whatever assets, so we're looking at WTI, you say based on your economic analysis and long-term technical analysis, you're a buyer. Buyers buy low and they buy at support. Okay? There is no other, this is what buyers do. If it's not low and it's not support, you're not buying it. You don't care what the price is. Okay, oh, Chevron or Exxon or Royal Dutch Shell, although that's a very complicated company. You should probably look at the history of Royal Dutch Shell. But anyways, it's very, very complicated corporate structure. So at this point now, you've made your decision, okay? You're a buyer. So now you use technical analysis on smaller time frames to identify, is price low and are we at support? That's your dual mandate. So price fell for 6 days, hit support, you could possibly buy, right? So what do you do though if you're a bull in this, a bear in this situation and it's starting to rise is what your question is, right? In that case, you try not to buy, or you drop to even smaller time frames, like let's say get off the 4 hour and get onto the 15. And very often, even if it's bearish or whatever, even if it's not doing what you want it to do on the long and medium term, sometimes even on the short term, you can get it to do what you want to do. And well, it'll be short-lived, but you'll say, oh, well, I'm short-term long, but it's long-term short, and then, I got to reverse and all that kind of stuff. Thank you for the reminder on the Bank of England. Cool, thank you. Please keep an eye on it for me. Peter Ward says OPEC made cuts today. Thanks, Pete. P-Dub. Okay, anyways, cool. So, right, can you see? That was pretty viable, wasn't it? Now remember, you would have had a plan on this days or weeks ago that you would buy somewhere around there. Now, the complication is this was probably a buy zone for you at the beginning of the week, but remember, the way that an Arctic turtle scenario takes place is where you got two traders, let's say some traders trading a daily chart and some traders trading an hourly chart. And they both have trade plans, and they're both bulls, okay? So in this case, the shorter term trader, he's like, or she says, this is what I want to buy. I want to buy it around here. But the daily trader doesn't even see that number because they're not looking at that time frame. They're not really using these pivot points. They're probably using more like monthly pivot points. And their analysis says, okay, they want to be a buyer down at this point. And of course, I did this like 3 weeks ago, I think I came up with this line, right? And so they're like, I want to buy it at this 52, 51 area. But they both did the same thing. So the shorter term buyer has to decide, do you just buy the swing on Monday? Totally valid. Remember, even though this dropped, your stop loss is supposed to be below the S, right, below S1, and that's way below us now. So you're cool. You would have survived that. Or you wait and you say, well, I think the longer term buyers are going to buy it first, so let them get in, and then along the way, you find ways to tiptoe into this. Okay? 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 And this being a key price kind of for that decision-making process. Because as long as you're below that, this could just turn totally bearish on you and kill you. Oh, if your video is unclear, adjust your YouTube settings. There's a thing down in the corner, just adjust the settings. What's up, Shane? What's going on, kid? Okay, cool. And, you know, again, thank you guys. I know there's a lot of newer names that I'm starting to recognize because, you know, you've clicked in maybe in your 10th or 20th webinar, which is really cool. So thank you for your loyalty and respect. There are also people in this room that have attended my webinars for 12, 13, 14 years. So you're on video, you're on webinar 14 and they're on year 14. But anyways, welcome. Welcome, welcome, welcome. And thank you for being involved. I think that's the best way to learn. Checking the clock there. Okay. Down, 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 down. Okay. Still working, right? Still doing its thing. The man, the myth, the legend. Cool, right? Is it helpful to back out and remind ourselves of our previous analysis? And also to add to that question, are you starting to do things like this, like leave yourself notes? What's up, Zemo? Com says, I'm here to stay. See, changed since I found this webinar. Thank you. Cool. Now, Coms, have you opened an account at tradersway.com? That's how you pay it back. Don't be a lurker. Make sure you pay it back. Kick down, come clean. Don't be a holdout machine. Robin says, good morning. Are there recorded webinar I can watch? Yes, Robbins. This is YouTube, so it's automatically saving a recording and will be available probably within an hour. Also, if you combine the work I've done on Forex.Today, Traders Way, and FX Bootcamp YouTube channels, there's somewhere between 4,000 and 5,000 Forex videos. So thank you, Robbins. And thank you, Coms. Yeah, Coms, don't go big. Just put in $1 million. And then over time, when you really, truly feel comfortable deep down, not just intellectually, but spiritually, then bump it up from there. But there's no need to rush. Be prudent. right? Be prudent. You're in the long game here. Okay, here's an interesting little battle. Hey, I was talking to a guy the other day, though, and he chuckled. And I'm like, what was that about? He's like, oh, just, $1 million. It just sounded so silly to him. Like, it's such a little amount of money. It's all relative. Like, money is all relative to people. And it's really funny. Humans are a really funny animal. To some people, it'd be like, it would change the world. And to other people, like, it's nothing. Right? So it's just funny. Anyways, check this out. This is an interesting thing. Okay. And by the way, it's as clear as mud. So you could either run from a setup like this, or maybe you could scalp it. Okay. So the first thing here is it's a 4-hour. Okay. So that's that. How did we end last week? Well, we ended in a profit-taking zone down here for bears. So one thing you might want to say to yourself is, did bears enjoy this? And my guess is yes. The absolute utility of a move like that is high. Right? So they're going to want to do it again, right? So the first thought then, if that's what you believe, because remember, it's your bias, then you should be setting up something like this. And I'm sure we talked about this on Monday, which was, I guess, yesterday, right? So nothing's changed. But I said that's really plan B. Plan A is sell off these moving averages. It ends up being the same dang thing. But one of them's going to work, right? So that's bears. So you could be like super confident that's going to happen. However, what's a bull going to do? Well, a bull was supposed to buy here, either as a front run or as a Sunday open. Any given Sunday, a bull would buy this. Okay. Now, we talked about it not being a V-shaped reversal. Okay. If it wasn't this pair, it was a different pair with a similar setup. Then I would expect something more like this would be sort of the play. Okay. How close are we? A couple of minutes. You're not alone. Oh. I am here with you. Oh, come on. Inflation 2.1. Oh, they're not going to do the live. They're going to make it difficult on us. Some websites are better than others. You go to the ECB and they're just like, boom, speech starts in 5 seconds. Guess they're not going to do it live. So they're just going to release the notes, huh? Oh, there it is. The global outlook, 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 outlook. There it is. Look at that. Look, it's like a little baby. It's a brand new baby. I love economic reports. Don't you just like want to zoom in? You're like, what the hell does that mean? World trading goods, OECD, that means rich countries. USA and EA capital goods orders. Some decline, huh? Except for USA. 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 Cool. Global conditions, indices tightened over. Oh, dip, 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 dip. All right. Look how good things used to be. See, look how it's hardly anything. It's hardly anything. It's 3 pages. Except for the other 50 pages that didn't load. All right, so it's more than that. Good. Where are we? Uh-huh. Interesting. UK, Euro. Wage growth, huh? Look at US. Look at Euro, though. Euro area just sucks. Look at the wage growth. Wow. Unemployment rate. Oh, my God. Look at this. It's sick. Socialism. Yeah. All joking aside, that is just a different model of capitalism. You have to choose when you're designing a government, because a government essentially, after, well, no matter what, there needs to be a distribution of wealth, right? Very cool. This is interesting. That's what governments do. They collect taxes and then they provide services. Very often the services can be things like protecting your borders, providing a legal system, and building roads. But sometimes it's like, well, it's not cool if someone doesn't have a job, we should give them money, or if they're old, we should give them money, or if they're young, we should give them money, or if they have brown hair and blue eyes, that's a great combination, we should give them money, whatever. The government make these decisions, and the more that it makes those types of decisions, the more it has to move the money from some and then distribute it to another. Okay, it could be from the some to the many, it could be many to the some, whatever, but it's a distribution, taxation, and then spending, right? Money, take money from them, give it to there. And you can debate how necessary or how good this is. And my point is not even the debate. The point is that a government decides these things, and usually it's through elected officials, so it's really the people who decide these things. Now, there's consequences to both choices. If you have a laissez-faire kind of system, let's say like Hong Kong, for example, the upside is, let's say, super efficiency. Anybody can, do whatever they want. But the downside is there can be, I don't know, let's say like if there's less oversight of companies that are being traded publicly in the stock market, if there's less oversight, then you're going to be more prone to, well, some companies might get listed on the stock exchange, but they might be lying to you. So like, for example, in Hong Kong, it's not common, but it's not uncommon. There are plenty of examples of, you're in a stock and then one day it drops 100% value and all the executives of the firm have left Hong Kong and they're gone. They're just gone. And you're like, well, what happened there? Doesn't happen in the United States, right? So there's a consequence of, well, less oversight, but then you can go somewhere else and say, well, if there's so much oversight, no one can ever go public, and that doesn't benefit too. So anyway, so when I look at charts like that where, you have European countries at 11% unemployment and very low wages. Well, that tells me it's a consequence of the system they chose of high taxation and low entrepreneurialism, or a form of that. Let's say so many laws and regulations over a company that they can never really fire an employee. So you're always going to have inefficiencies and stuff. So anyway, so the consequence of that is you're going to have high unemployment rates and high taxation rate, but you're going to have lots of money to therefore then give to people to say, oh, you're out of work, here's a bunch of money, but then there's not a lot of incentive to go back to work. And so but everyone's taken care of. So it's not good, it's not bad. It's just, you can see it in the numbers where 11% unemployment and slow growth is a consequence of high taxation, for example, and lots of distribution. Right, and then you compare Spain to, I don't know, India, and you'll see quite a different process of deciding how to run your economy and run your society. Neither here is nor there, they're just different, right? And then compare the United States, that is different. And how is Canada similar or different to, or the United States similar or different to than Canada and Australia? And you'll see there are differences. And there are consequences to the differences, and you can plan them. Very interesting stuff. So anyways, long story short, if you're bear, look for something like that. If you're bull, look like something like that. Easy peasy lemon squeezy. Should we look at the pound, isolate it? India! Man, I'm overdue for a lot of trips. Going back to India would be great. I have to do South India. No, Robbins. I'm just letting it happen. If you know how to scalp, then it's not a problem. Just look for pullbacks, okay? But, look, we have plans already identified, so there's nothing new to add. So we did this, what, yesterday? Maybe even Friday? So, like, what do you do now is a terrible question. In fact, it's probably the worst question you could possibly ask in Forex. What do we do now? Should we be jumping in? Those are terrible questions because, well, first of all, my answer will always be, well, what was your plan? Remember, I typically try to teach you guys what you're planning today has nothing to do with what you're going to do today. Right? Now, that's not always the case, but it's something you should always be doing. Like, what's the setup for tomorrow? And then you're preparing for that, and you're ready for that, and you're not watching Carney do a speech, and then you're like, now what do we do? I mean, there's just no way that you're in control in a situation like that, right? If you don't know what to do, you're out of control. Now, I'm not putting you down. What I'm saying is, you need to be a confident trader, right? You need consistency in your trading. And to get consistency in your trading, you have to have control of the situation. And since you cannot control the market, all you can do is control your behavior. That's where trade planning comes in. So if I drew this yesterday and I said, well, if it comes down into this 382 area, this role reversal area, this pivot point area, right? This area around 181.50, I might consider being a buyer. So from that, your trades, the next thing is just now use simple technical analysis to look for entries, right? But what do we do now is the scariest of all questions. I suppose the safest answer is what do we do now? And it should be nothing. Okay. Anyways, so how about a scalp like that. Now this is a little dangerous because we're still below this area here. Okay. So this could drop, right? The pig could just drop big time here. But if you wanted to be up anyways, that's how you filter out all that noise. And I wouldn't put in a full lot here. I might only do a half lot, right? Until we get up here, because if you're right, it's going to come up here and it's going to come back, and you'll add another lot there, right? No, planning always leads the way, Zamo, not technicals. Okay. Planning. So this is an easy buy. If yesterday we did analysis and we said somewhere in this blue zone we would like to buy. So now you have price action in the sense that relative to this high, so right, relative to this high, we have a new high, so there should be another high here, and then we should be here, and then it should drop, right? It's just, what does the price action tell you? Up, down, up, down, up, if you get this right, if you're a bull. Am I right? Hey? Did you guys put a little thumbs up yet? Huh? Anybody? Did I do all right? Yeah, Brooke's on fire. So on the 1 minute, you've had your shot, right? So there's your 382. 50% is a better overlap, but whatever. You are know the lose. Thank you, Reddy. Yeah, South India would be very interesting. There's so many places I'd like to go. Turkey. Would love to go to Turkey. Thank you guys for the little thumbs up thingy. It's important for YouTube. Where else? I think I'd like to go back to Japan and do a serious tour of Japan. Go for the Cherry Blossom Festival and like stay a month. I think Japan has such a deep history. I think that would be an interesting thing, but who's got a month? What else would be a fun trip? How about like Bulgaria? A summer, like July in Bulgaria on the Black Sea. I think that might be fun. Okay, so the true sweet spot here is this, guys. Okay, if you're scalping. Yeah, Shanghai's nice. I've done the maglev train there and stuff. And but so I don't know much about the history of Shanghai. I think I'd like to do that more to learn it. Yeah, I've done Saskatchewan. Is that right, Harley? It's really interesting. No, thank you, David. Right on, David. Remember, pay it back. Visit tradersway.com, open a demo account. At the very least, right? Yeah, Dan, I got friends going to Ireland this summer, so I can't go there. I've always wanted to go to Turkey, and I have a lot of Turkish friends, but I haven't talked to them in 25 years. You know, we're that close as friends, but I could certainly contact them. But then, you know, I know somebody who I can't mention or what agency he's with, but he's like, dude, Istanbul's bad. I'm like, what do you mean Istanbul's bad? Istanbul's awesome. He's like, as soon as I get off a plane, I got people following me. They know I'm there, and bad things can happen. I'm like, well, look, I don't mess with people. I spend money. They love me at the Ritz-Carlton in Istanbul. So, anyways, I mean that's half the actual reason. The Ritz-Carlton in Istanbul for like super cheap, like I think $300 a night. You can get a beautiful, beautiful room at the Ritz-Carlton, which is dirt cheap for any Ritz-Carlton. However, you have something like a 1,500 square feet private patio with hot tub and outdoor bar and everything. I'm like, oh, like your own private rooftop deck? Like not even a deck. You could have 50 friends over to your hotel room and just all hang outside and drink coffee or something. I'm like, oh my God, that's so awesome. So I want to go just for that. But the history of Turkey is just crazy amazing. But I don't know. Who's got time for these things? All right, is it starting to turn? To every sin turn to. Or how about what? Yeah, you can get those skin scrubs in Turkey. I've seen it where they scrub your skin to the point that you're bleeding everywhere. I'm like, oh, that sounds really good. Not. All right, come on, 1 minute pound Aussie. It's funny that we're even on pound Aussie, huh? Let's see. Is that right? I just happen to be on this. Yeah. Thank you, Harley. All right, all right, all right. Just kind of bumping around here. Thanks, Mac. Big Mac. Macaroni. Maxter. All right, let's just move. So, overreaction, reaction to the overreaction. How's pound Swissy doing? Crazy, huh? How long ago did we do this channel? Was it 2 weeks ago? It's crazy that we did this 2 weeks ago, huh? And we're still in the channel. Boo, 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 boo. Yeah, if I wasn't in school, I would do a world tour, I think. Let's see how many of you guys I can meet. Or the other way to do it would be to host 1 or 2 like conferences. A conference wouldn't be the right word, but I pick an exotic location, like we all go to a beach in Malaysia, and we do some awesome trader exercises. See, like I want to do something like that doesn't really get done before. Like I don't want to do another thing where I show up like, look, a 5/8 cross. If you only use the 5/8 cross, you'd be rich by now, right? Like I hate those types of things. Hey, look at the MACD. The MACD will make you rich. Pay me $5,000 and I'll give you a MACD. Like, I don't want to do something like that. But wouldn't it be cool to like meet in an exotic location somewhere and have like, I don't know, what, 40% fun, 60% work? And bring in experts like a psychology that works with post-traumatic stress disorder of soldiers that come back from war. Like what kind of exercises? I have no idea what it might be a horrible idea, but I'm just thinking out loud here. Like, how do psychologists teach people with this type of stress to manage their stress and cope with their stress? What kind of, right? So, for example, I remember reading about the Blue Angels, which is the tactical formation flight team for the U.S. Navy. So when you see air shows and stuff, they fly like eight FA-18s and Hornets and really close formation and stuff. Like, how are they so good, and why don't they make mistakes, right? And of course, they sit down every time before they fly. They sit down in a conference room, and they actually fly. They close their eyes and they fly, and they call out times and stuff, and they actually fly visually in the same fashion that Michael Jordan would visually, mentally, right? Mentally, but visually, because you're thinking about it, but only in your mind, how he's going to respond in certain situations. Like if he double teams, who, you know, if they don't double team him, what's he going to do if he's in the corner? So when it happens, he's already played it. And so I spent a lot of my time in my book a million years ago talking about things like that, right? So wouldn't it be interesting, like bringing truly experts? Like imagine if you worked for me in a hedge fund. You know, a hedge fund would probably hire these consultants and bring them in, right? So why don't we do something like that? And we can sit on the beach and listen to the psychologist, and then there's 2 hours of fun time, and then we're all going to meet for dinner, and so you that kind of stuff, right? But the problem is these things, like if you guys are going to attend, what if I said, all right, it's going to be $3,000 and you got to fly your ass out to Malaysia and pay for your own hotel? A lot of people are like, oh, forget it. I'm not going to do that. And so that's where it all falls apart. So I don't know where people are financially. But that would be, I think it'd be an awesome thing to do, right? All right. But what if? So we're just hanging in here again. Isn't that great? What are you going to do? What you going to do? So let's move off the pad. Let's just keep going. It's just another Brexit. Just another Brexit. Ricardo is ready to go. How many people would do something like that? Spend a week in Cape Town. Just talking about being a trader, preparing to be a trader, have experts come in and talk about various things, various workshops. Buenos Aires would also be another great place. No, Kevin, right? No, I'm not saying pay me. I'm saying the cost of like the food and the hotel or whatever. The cost of flying experts in and stuff would add up. I don't mean going to me, Kevin. Yeah. I didn't mean it that way, Kevin. And if it sounded that way, I apologize. I don't think I'd get any money out of it. I wasn't talking about making money. I was talking about paying the expenses. Thailand, another great, yeah. But the thing is, I heard that Malaysia is as nice as Thailand. I know if you're from Thailand, you might disagree, but I've heard Malaysia is as nice as Thailand, but much less tourism on the beach, and things are cheaper. So Thailand has too many tourists and it's very expensive and all that kind of stuff. You go to Malaysia, the beaches are just nice, but there's no tourists, and therefore everything's dirt cheap. So anyways, that was my thought. I want, right? Yeah, no. No, Kevin. Yeah. Phuket, yeah. And see, that's the thing, though, right, Travis? Like, everyone goes to Phuket. You get there, right? Just everyone goes to Phuket. And you're like, oh, well, I also went to Phi Phi. You're like, really? You're like the only person. But it's nice, though, right, Travis? It's nice. So imagine if you had that and we walked on a beach. What if we had the whole beach to ourselves? Let's say it's 50 of us all get together. And we're at a beautiful 5-star hotel on a beach that's essentially private, tropical jungle on one side, beautiful waters on the other, and we can just sit on the beach and talk about, trading is such a hard gig, and we talked about it, and we're together and that kind of stuff. You can email me, wayne@fxbootcamp.com. I may not answer. I apologize for that, but so anyways, it's hard for me to do these things when I'm in school, but who knows? Maybe we can do it in a couple of years. All right. So WTI is doing its thing. Okay, gold is just kind of doing its thing. Here's our line. Remember our line? This line, if you don't recall, let me pick this up again. This line is distance from there to there. Okay, and then I projected that out to this line. Okay, and it was pretty accurate. Pretty accurate. So now we need the higher high, higher low, right? If you're going this way. If you're going to go my way. Yeah, I love the idea too, and I'm trying to look at things and do things differently. Like, I don't mind teaching people the basics of trading, but imagine I've been doing it every day for 15 years. I really want to do some other stuff too. And so I'm very interested in doing different things as well, which I think will benefit some, but maybe it benefits all. But these things, everything costs money in our capitalist world, right? And some of you don't have any money, but some of you guys are probably bajillionaires. So there's something in between. Like, I would like to meet up with everyone in South Africa, or in Malaysia, or Buenos Aires, or maybe all three. I just don't know how many people are going to show up if I'm like, okay, let's say it's $2,000 or $3,000, but it's going to be a whole week. Maybe it includes your hotel rooms. Maybe it's $3,000 and it includes your hotel room. I don't know. Probably not. But I'd like to not make it about me. I'd like to make it about us. And therefore, let's talk about what we want to do and who we want to bring in. Okay. Like, a friend of mine knows Richard Branson, for example. Hangs out with him in Nectar Island. Has done TED Talks with him and stuff. And also Tony Robbins knows him personally, right? I'm like, what if we all meet up at Tony Robbins' place in Fiji and Tony spends an hour with us and a bunch of other people? You know, it certainly could happen, is all I'm saying. Yeah, NP, and I have a really good friend in Buenos Aires, actually. He's a self-made millionaire. I knew him in college. We were roommates, and we'd sit up all late at night in the living room watching infomercials and taking notes, and then we'd watch a whole thing like Don Lepre. If you just place one tiny ad in a newspaper and it makes you $1, well, what if you had 10 ads, or 100 ads, or 1,000 ads? If you had 1,000,000 ads, you would make $1,000,000 a month, right? So we'd write this down, and after the half an hour infomercial, we'd compare our notes, right? So he went on and became a self-made millionaire. Oh, what a coincidence, right? So anyways, he lives in Buenos Aires, and he does Bitcoin stuff now. He's into Bitcoin. So it'd be interesting, like, what if we combined Forex with Bitcoin trading and whatever. He's more in the, what do you call it, ICOs, when they launch a new currency. But anyways, like, we could combine our audiences or something. We can get together, and he's a really interesting dude. But we can make it about trader psychology conference or something. So anyways, just looking at this, waiting for the next, right? So you need the break. So these are like, I didn't use my drawing tool. I used MT4 to draw these because I love to leave myself little clues or mementos. So that's what I'm looking for. This would be a buy, this dip here. If I'm a bull, I want to buy dips at support, right? At some point, I'm going to have to worry about a top here. Okay, but that's the next worry. But I can mark that and say this M4 is going to be quite a worry because, boy, there's a monthly pivot for bears. So bears are going to sell here. Bulls are going to sell here. And it sets me up for a double top. So I got to worry about that. So I'll even adjust this. Okay. So this is just waiting. This we did. This is still the same kind of thing. Okay. This is supposed to be your weekly swing low. Swing low. And this is your swing high. Sweet chariot. So which one's going to win? Well, again, if you sold up here, you're profitable. But if you're waiting to do that, then, you know, not quite ready yet. Okay. But this is the weekly M3 after a weekly M4. Definitely a swing low. So these guys are kind of trying for this. Doesn't mean they're right, but they did it properly, and they're not going to lose money on this. And then a bull is just going to wait for something like that. So it just depends on what you are. Right? Well, thank you. The way you explain is so clean. Well, remember, it's not, I think it's not the analysis, it's the mindset of having clarity of what your intent is. So I used to talk about that a lot. What is your intent? If you know you're going to buy USD CAD, you've already done all the analysis, you think oil's coming down, you think global macroeconomics is overheated and it's going to cool off, you don't think the Americans and the Chinese are going to create a real deal because they're meeting in China right now. So you think, you know what, Trump is going to raise tariffs even more, and that's really going to hurt macroeconomics and all that kind of stuff. Whatever, you've done all your analysis, and you're like, this is going up. Once you've made that decision, trading is relatively easy because you're not guessing and double guessing and such. You're doing things like, okay, this is going up, so I'm going to buy it here, between here and here. It's not that hard to do that, right? In fact, you could put orders there. You're like, okay, well, once we get down into this area, I'm going to buy it. Cool. Nice. Then you're like, well, I don't like being naked out there, so I'm going to throw down an OCO. I'm going to have a 50 pips stop loss, and I'm going to have a 300 pip limit order, take profit order. And that will trigger if that is on. So this will come down. If it comes down and hits this little line, it will put me in. And then the OCO will put a 50 pip stop, a 300 pip limit, and I'm done. See? Very difficult. It's called a trade plan. But if you're kind of monkeying around trying to figure it out, that's always going to be harder. It's always going to be harder. Okay. To reverse this, if you were a bear, I mean, you probably were a bear up here. Okay. You were probably a bear here, and, you know, nothing really happened that week. Okay. This really got the bulls out, so you would have been a bear here. That's easy. And you didn't quite get a setup here. You would have been interested. Maybe you took a shot, but I don't even think there. I don't think that even really happened for you. But you could have counter-trended here or sold it here. So it's just like these things are easier once you've pre-established your bias because you know what your setups are. I mean, like, where was the bearish setup here? I don't think there even was one, but that certainly was. We don't know where it's going, but you'd know where the entry is. Yeah, Brooke, I don't really know all of that, right? I'm wondering if, like, real estate is the way to play Brexit. So, like, with real estate, it's sort of a different answer. Like, let's say so I talk about seasonality in Forex. Okay. And then we talk about, like, the business cycle. And the business cycle has a lot to do with, like, interest rates and consumer spending, all that. And then you have the real estate cycle. And I'll just do it this way. Okay, they're all intertwined. Like, for example, in real estate, let's say you're not an expert in real estate, but is December a good time to buy a house or even to sell a house? How about this? Is December a good time to sell a house? You might not know anything about real estate, but is December a good time to put your house on the market for sale? I got to be careful with the lag. So there's a bit of a lag. So, okay, then let me, instead of asking a question, I'll just say, December is a terrible time to put your house on the market. No one's going to buy it during the holidays. The kids are in school. No one likes to move and pull their kids out of their current school and stick them into a new school in the middle of everything. So you just don't put your house on the market. But you put it in the market, put it on the market in the spring so that people during the summer buy your house. So they want to look at your house in May, buy it in June. The financing, all that closes in July. You move in August, and your kids go to the new school in September. And they're already moved in, and everything's good. So put your house on the market in August. Well, that's just practically just stupidity, because there's no way anyone's really going to give you a decent price until May of next year. So you've missed the whole seasonality. So that seasonality, even though we're talking about a course of just a year, exists in the real estate market, exists in the business cycle. Business cycle, you have seasonality around taxes, around annual reports, around quarterly announcements, and all that kind of stuff. So they all have all of this together. So imagine though now your real estate, let's say the cycle is 13 years. Okay? And the cycle looks like this. Okay? The cycle is like when rents, let me use my arrows. Rents are going down, rents stabilize, rents go up, rents stabilize, rents come down. And you could, if instead of rents, you could probably do occupancy rates and all that kind of stuff. And in there, like this is the time to buy something because the price of real estate is low, or to develop something like knock down an old building and put in a new building, because things like interest rates are going to be low, because this is going to tie into the business cycle, right? And vacancies are high, vacancies or occupancy rate is low because the business cycle is low. People have lost their jobs, they've moved away and all that kind of stuff. So there's empty apartments and all that kind of stuff. But at some point, the Fed lowers interest rates. They're trying to entice borrowing, and so you come in a real estate developer and you say, okay, things have sucked for quite a few years, but they have stabilized and there are signs of improvement. So we're going to borrow money here and we're going to start building. Okay, and then at some point rents are going to start going up. So they're starting to fill, or maybe they filled all. So maybe this is development here, and then rents start going up here because now they've filled most of the vacancies, and some of these newer buildings are coming online, which is attracting people back to the neighborhood. And then all of a sudden, new stuff's entering here, but there's already vacancies. And so whatever, there's a cycle, right? So you have to ask yourself in London, will Brexit kill? So let me change the color here. Will Brexit kill the real estate market in London for the next year or two or three or whatever it is? Because they feel like jobs are going to leave the UK. They're all going to go to Berlin and Frankfurt and Paris, and all these people are going to leave London, and vacancy rates are going to go up. So therefore rents and property values are going to go down, because property value is based on rent, because it's just a cash flow. Buying real estate is buying a cash flow. That's all it is. It's like buying a bond. So anyway, so at some point, what if people are overreacting, even if there's a hard Brexit? What if it's not as bad as what people are imagining right now? And I find that that's almost always the case in any situation, whether we're talking about real estate or anything. I mean, anything. It seems like most people freak out. They act emotionally, not intellectually. But that's just my point of view, because I don't have any emotions. So anyways, what if it's actually a pretty good time to buy, is what I'm saying. And when you're buying real estate, if you're in a situation like this, all you're asking yourself is, do you have the full 13 years for the appreciation? And if so, you're going to make money because you got the cash flow. So someone else is going to pay the mortgage for you. So you get to own it for free. But to get paid, you have to sell the appreciation, which means you have to sell up here before all the losers. Because, most people are going to miss these things because they don't know how to do it properly. So you got to know when you're down here and buy when no one's buying. And then you got to be up here and sell when no one's selling. And the rest is easy. So now the question is, well, if the UK goes into recession, that's perfect because it puts me in the low end of the cycle. And do we have in 13 years, even if we have a hard Brexit and things are bad for 5 or 6 years, is 13 years enough? If I can get a deal, remember, I don't want to pay full price. If I can get a deal in Mayfair and buy a whole building, if I can get a good deal because someone paid too high, now they're desperate and Brexit's killing them and they're over leveraged on a bunch of other properties, so I can buy this for 60 cents on the dollar. Boom. Can I make money in 13 years? Yeah, it'll probably be easy. And the cool thing is, where do you get the money from? Banks. Who pays the banks? The renters. You're like, what do you do as the owner? Sleep in, right? That's the difference between being rich and being wealthy. Your money works for you. So anyways, that's what I'm wondering. The pound will come and the pound will go, right? Having the pound down, though, is fantastic because it makes the real estate even that much cheaper in terms of dollars. Yeah, well, the thing, though, Brooke, I think that story of hard Brexit, London collapsing, it's the end of the world as we know it, cats living with dogs, I think is probably probably not incredibly accurate. So all of that creates inefficiency. So if I can go in and buy a beautiful, nice place of commercial real estate in the best part of London and say, hey, man, I got at least 13 years to make money on this, I'll probably do all right. All right. I think we've done everything, right? Yeah, I think we're in there. I guess let's just take a quick look at the yen-yens and then we'll get out of here. Oh, NP. NP says there'll be some pain first. Yes, that's the opportunity. The pain is the opportunity. Some people have made bad decisions, or should I say poor decisions. Okay, and we see this in all kinds of markets. The stock market's another great one. Okay, professional investors bought, so I said to start buying the stock market when the Dow was at 8,000. And by the way, it's not a guess. It came down, it came up, it came down, and there was something like a 618 Fibonacci retracement. It was all planned out, days in advance, all this kind of stuff. Not days in advance, weeks in advance. Okay. So imagine now in the stock market, you had institutional investors buying at 8,000, at 8K, at 9K, at 10K, all this kind of stuff. And by the way, this happened all in about 2 weeks. Amazing though, right? And now the Dow's at, what is it, 25,000, let's say. And there are still people buying it now. That's the pain. These guys don't have pain. These guys don't have pain. If they bought down here, there's no pain. They're just sitting on a big nest egg of their clients' money, charging them 2%. Right? Every month they pull out 0.167%, put it in their pocket. What'd you do this month? Nothing. Oh, I called my clients. Ride it out. Don't worry about it. But what about the people that are buying up here? They're paying $2,000 a share for Apple because Apple's been going up. People are so stupid. In particular, financial advisors. Oh my God. But anyways, someone is going to get crushed. And it's usually the little guy or the rich guy taking advice from a financial advisor. So anyways, what you want to do now, looking at real estate in the real estate cycle, you want to buy low when Brexit's going through, because this is where you're going to find the pain. And who's going to be dumping that at 60%, 60 cents on the dollar? Well, someone that was buying in this part of the cycle. They'll say, oh, but real estate prices were going up. But you'll say, yeah, but vacancy rates were going down. And prices don't follow vacancy rates. And that's where people that don't know what they're doing start doing stuff. And now they're going to buy too high. The market's going to collapse. And they're going to sell it to me for 60 cents on the dollar. Maybe 40 cents on the dollar. And I'll buy when no one else in the world's buying. And I'll get a good deal. And I'll ride it up. And 13 years later, someone's going to buy it from me. And they're going to overpay. Not my problem. They're going to overpay. Why? I'm going to sell it right as it's going to tip over because they're watching prices and I'm watching vacancy rates. Oh, it's right. So good. Someone's going to buy it from me. They're going to pay top dollar because they'll say, look, this thing appreciated 5% year over year. And last year it was up 10%. The year before that it was up 30%. They're like, oh my God, this is so nice. Good. Buy it. 3 years later, it'll be losing money, but it won't be mine anymore. Easy if you have the knowledge. So that's what I'm wondering about with real estate. Is everyone freaking out? And of course, the other side of that, people have been buying, since Brexit, they've been buying real estate in Germany in anticipation of Brexit, and even Ireland, right? And what they may find is those prices are going to go up quickly because that's what makes London prices go down. So they're all going to go in there. But the people that did it a year or two ago are making money, and they're going to make money. But people are just starting now, where when Brexit hits, then they flee to Germany or Ireland, and then they start buying real estate there. Well, they're already 2 years late. So who's going to get hurt? Well, okay, device. Wayne, as a trader, how can we make money on real estate? Well, the thing is, you're going to get very wealthy trading currencies. And at some point, you do want to diversify. You don't want all your money in your Forex account and that all you do is Forex. At some point, you do want to just say, you don't want to spend the money, but you want to park the money somewhere else. So you say, okay, the Forex account is quite big, right? And all that kind of stuff. And if you keep following your formula of lot size versus account size, you're just making too much money. So you're like, it's just silly, right? So you take that out and you buy some real estate. This is a great one. Don't buy a boat. Don't buy a Rolex watch. Don't buy those things. That's what, that's how you get poor fast. That's what kids do. Okay? If you're going to buy a Lamborghini, and let's say a Lamborghini is $300,000, A, don't make payments. B, it shouldn't be a big deal. They're like, wow, okay, I made $800,000 last year, so now I can buy a Lamborghini. No. A Lamborghini should be like, you had a good month or you had a good week, right? Like a Lamborghini should be like, put it on my credit card and you walk out, right? So anything you do should not be a big deal. That means you're making $300,000 a month or $1 million a month. Okay, make $1 million a month, go buy yourself a Lamborghini. But if you make $1 million a year, that's a stupid decision. You're going to spend 30% of your income on a car? Are you retarded? Right? So in that case, take your money and put it to something that will work for you day and night and day and night. You see what I mean? Own commercial real estate or something like that, or buy bonds, for example. So like another thing I'm planning on is in 2024, the stock market in the United States is going to fall. Okay, 2024. 2024. And typically what happens is the stock market's way overvalued. Interest rates are high at the Fed. And we start topping out in the business cycle, which we already talked about. So in that case, typically interest rates are high because everyone's in the stock market. So what I would do is I would exit equities like I did back in 2007. And my wife and I were just talking about this maybe a week ago. We sold all our stock portfolio before the crash. We sold the whole thing. And I told everybody at FX Bootcamp on the very day, I'm like, that's it, we hit the day. So we sold our entire stock portfolio, right? My wife had accumulated stock at a company over like 12 years. I mean, it was a big deal. And we sold at the all-time high for her company. Amazing, right? Glenn, you have to pay me money for me to tell you that. But anyways, so we sold the stock market and we sold our house at the top of the California real estate market, right? Cool. So what happens then is now you have all this pile of cash. What you can do is then buy bonds, because no one's been buying bonds. Why would you buy bonds when the stock market's been going up every day for 12 years, right? So what you do is, you know, like back then, what was a 10-year T-note? 6.5% or something? So you take your money, you buy a T-note for 6.5%. So now when the stock market falls 44%, let's say negative 40%, you're at a cocktail party and you talk to your friends and they're like, oh my God, I lost 40% of my retirement. What are we going to do? Oh, my house has dropped by 40%. My net worth, man, my net worth. It's going to be the end of the world. And they're like, how are you doing, Wayne? Oh, I'm up. I'm making money. They're like, what? My house is down 40%? My stock market portfolio is down 40%? And you're making money? I'm like, yeah. I'm earning 6.5%. But everyone in the world now wants to buy my bonds because they're like, oh my God, I'm losing money like crazy. I got to buy something to save my soul. What happens to the price of my bonds? I own bonds now, and they're paying me 6.5%. But I can sell my bonds if I want. So now the price of the bonds goes up. So I can ride that up for a year or two until I think the worst is over. And then I'll say, hey, buddy, you want to buy my bonds? I'll sell you my bonds. Boom! And I make money on that. I sell my bonds. What do? I buy real estate and I buy the stock market. Why? Because all these guys are getting out. They're losing money. Yeah, get out. Get out. Give out. Totally get out, dude. Your stocks are down 40%. Now you should get out and sell them to me. And I'll sell you my bonds for more than I paid for them. And it's so awesome. It's so awesome, guys, because the herd is always late. Always late. So you got to learn these cycles, guys, which is all part of trading. It's a part of what I do all the time. When everyone's trying to get out of the stock market, well, what do they want to buy? They want to buy the bond market. They want to buy safety. They just lost 40% of their stock market. Great. So sell me your stock market for a 40% loss. I'll buy it from you for a 40% discount. I'll tell you what, I'll charge you a premium for my bonds. So now their money goes here and this goes there. And right? And the smart, savvy person just makes tons of money. Because you keep buying things at discount when everyone's dumping it because they didn't know what they were doing in the first place. And now they want to buy this. Now everyone wants to buy this. Like, well, where were you 2 years ago? Oh, I don't know. Just give me it for any price. I'll pay you. And then another guy, no, I'll give you even more money. Just give me those bonds. Like, okay, great. Sell your bonds. And then you go around. It's great, guys. It's great. You just have to understand. It's not genius, it's planning. Hey, Kat. Yeah, my wife has, what, 12 years of experience managing wealthy people's money. She's smart. Oh, yeah, she's smart. So anyways, yeah, interesting, right? So those are the, in between all these cycles, guys, you have to have, so what you do is you buy at the bottom and you sell at the top, right? In cycles, just like you do in charts. Buy low and sell high. But in between, what if you have 1 year of seasonality? So now you got this. And then you got, let's say, 8 years of business cycles. So you got this. And then you have a 13-year of real estate cycle, which is a much bigger super cycle. Okay? So what do you do in between all of this? That's what trading goes into. So now you got all of this. You got your 1 year cycles, yens go up, yens go down, yens go up, yens go down. And then you hit sort of a bigger cycle. And this is where you get a bigger kind of move down like we had this year, a 10% drop in a week. And then it's going to pick itself up and top itself up in the super cycle. In the third, let's say, so again, we have annual cycles, 1 year cycles, 8 year cycles, and 13-year cycles, let's say. Okay, roughly. I'm just making this up. And so you're going to have seasonality cycles, and then that's going to last a few years, and then you're going to have a bigger cycle, and then and then the Fed's going to change its policies from, let's say, we went from quantitative easing to no quantitative easing to quantitative tightening to then raising of interest rates, and then all this stuff changes over time, and you build up these sort of assets, but then you're in tune to the bigger cycle. You're always thinking like everyone else, the 95%, they're thinking about maybe today, but most people don't even think about today. Like I'm talking about walking to my neighbor. I'm like, what's going on in the stock market? What's going on in China? What's going on in Turkey? They know what's on TV and they barely understand that. What's reported on TV is nonsense. So they really don't know even what's today. And they do remember how bad things were in 2008, and things got much better by 2012, but now 2018. Now they're worried like, oh, well, what if the stock market comes down, and all this jibber jabber they hear on TV, but they just literally don't know anything. So if you have the ability to do macroeconomic analysis and follow central banking policy and look at supply and demand for things like energy, but supply and demand for things like bonds, and understand concepts like macroeconomics leading to risk on and risk off, and looking at like, why is there an 8-year cycle in politics? Well, isn't that interesting that there's 8 years in a presidential cycle, and you're like, oh, well, maybe they're interrelated, and why 30 years on a, I don't know. But there are these smaller cycles, medium cycles, and longer term cycles. And if you use your gray matter between your ears to put all this together and become a hardcore disciplined trader, you are getting ready for things in advance where 95% of people don't even understand where they've been or where they are now. And you're already setting up the ambush and setting up the trap. Like what I say about 2024, oh yeah, I've already had conversations with my family about it. Oh yeah, this is what's going to happen, and here's what we're going to do, and then we'll sell all of this, and we'll buy all of that, and then we'll do this, and all of that's going to happen. And I have these conversations, not about today. Today is passé, right? Today. So as a trader now, what are you setting up for tomorrow? What are you setting up? Like, where are we going for the rest of February? What's April going to look like? What's June going to look like? I'm already doing things. I know what I'm going to do in August and September, right? Because I know the seasonality of it. And then what about, where are we based on macroeconomics? What's next year going to be like? Oh, probably slower growth and all that kind of stuff. Okay, well, slower growth, but up. Right? Slower growth and up. Well, what does that mean? If GDP is still positive, but dropping from 2 point something to 1 point something. Oh, well, then we're in this part of the cycle, of the 13-year cycle. It's still going up, but, right, rise over run, the slope of this curve is steeper than the slope of this curve, rise over run. This is flatter, this is steeper. So that tells me where we are in the super cycle. Great. So we still have this amount of time. And just simple, well, maybe not simple, but work, doing your job, will tell you how long that'll take and what you should do when that happens, where your trigger is. And everyone else is just lost. So if you want to be that person, people will pay you lots of money to make those decisions for them. Imagine a billionaire or someone that has tens of billions. They say to you, Wayne, why did you say the stock market's going to come down in 2024? Why not 2023 or 2022 or 2021 or 2020 or 2019? I'll say, oh, well, for pittance, for 0.1% of your net worth, I'll tell you. I'll explain it to you in ways that you will fully understand, and I'll help you prepare. Huh? Is that where you want to be? Where someone with money says, oh my God, that's powerful. Now, why that year? And what should I do if you're right? Like, help me, NP. Help me, Brooke. Help me, Kevin. Help me, Michael. What should I do? I say, oh, sign this contract and I'll tell you all about it and I'll help you prepare. I'll protect you. You will not have to lose 40% of your net worth again like last time. We'll prepare. I will prepare you. I will protect you. You have to pay me money. That's where you guys want to be, right? So let's go. Yeah, buy Bitcoin. Yeah. Right? That's what planning does for you guys. I'm trying to get you out of scalping. Scalping's a crutch. No one's going to give you lots of money so you can scalp it. It's simple, hard work. If you happen to be the world's greatest scalper, you'll make money, but it's the hardest way to make money. And as soon as you stop scalping, you stop making money. So by definition, you might get yourself rich if you're if you're the world's greatest scalper. You'll get very, very rich, but you'll never get wealthy. It's impossible. So if you're working with wealthy people, they're not interested in rich. They're already wealthy. They want to stay wealthy. They want you to take their money and use it in ways that it makes money while they're on their yacht or while they're skiing in Lucerne, right? So you have to be wealthy. You have to think wealthy. You have to know how to invest and trade for wealth and not this petty little, I'm going to make a bunch of scalps on my MT4 account on my cell phone and then go out and buy a yellow Lamborghini. And that's just, it's thinking poverty. So you got to change the thinking if that's what you still think about. So anyways, I've taken too much of your time today and I apologize for that. Some technical analysis in there, some trader psychology in there. But, you know, honestly, just thank you for hanging with me. What would I have done otherwise this morning, right? Do some trading, then sit down and do some homework and all that kind of stuff. So I really look forward to our time together. And I appreciate you in my life. So thank you very much for being on my team and being a subscriber. Thank you for being a client to Trader's Way, because if it wasn't for Trader's Way, you probably wouldn't have this, right? So if you don't open an account to Trader's Way, shame on you. Okay. So anyways, I guess I should go full screen if I'm going to throw out the peace sign, right? So anyways, peace on earth. May the pips be with you. May your profits be above average. And like I said, there's 4,000 videos on YouTube associated with my work. I hope you watch at least 3,000 of them. Don't forget to subscribe and like and all that kind of stuff. And my chart templates are below the video, downloaded for free. See you tomorrow, guys. Cheers.